Welcome, ladies and gentlemen. This is BetterTrades coach Robert Roy, and this is being brought to you from RobertRoyTrader.com. Guys, I wanted to first go over a market update of the S&P 500, and then I wanted to talk about one recent trade that we did. So let me go ahead first and take care of our disclaimer. Basically, it says, I am not an advisor. I cannot legally tell you to buy or sell a stock. It is against the law. The SEC, which is the Securities and Exchange Commission, requires you to be licensed in order to do so. I am not, and I do not want to be. So if you find a candidate, an indicator, a trade setup, something, anything that you like here today, my suggestion is you paper trade it first before ever putting one penny of real money into the trade setup or indicator, and then and only then would you do so if it fits your own personal risk profile and risk tolerance. Now keep something in mind. Because I am not an advisor, that means I am not under trading restrictions, which means I may choose to enter or exit a trade at any given time without prior notice. All right. Let's go ahead and jump off of that. Let's go take a look at the S&P 500 first. Okay, so when we look at the S&P 500, guys, we've got our Fibonacci drawn on the S&P down here from this low that we had on at 1820 all the way up to the high we put in about that 2075, 2076 area. We pulled back. Now this downtrend line that we pulled back into, if we go back and look historically, you're going to see that that line actually has a very important representation all the way up this entire trend that's taken place in there. All right, so it has been a very necessary move, a good pullback to that level. We came back and just about tested it again, and even on the last pullback. But after the video I just did today for my group in the Market Insights, I wanted to let you guys know that there's, as I did to them, there's this wedge pattern starting to form potentially. That upper blue line that I drew down in here, that line has importance to it, but you have to understand something. I don't know if we're premature on the drawing of that yet. So we have to see what happens. That is a critical area, is that downtrend line. It's a confluence right at this Fibot line that we've got drawn in there, and we're looking at that as a potential wedge, so we want to see a breakout. Where does it break out to? I don't know. It's going to break out up or down, or could peter out sideways. It all depends how far into the wedge we go. So we've got to keep our eye on this over the next couple of days, guys. But if it does break out to the upside, we do have a breakout of, let's see, 78 to, we have a breakout to the upside of about 100 points from this 61. So we're looking at a move to about 71. You know, 2171, 2170 we'll call it, right? And that's a rough number based on the standard calculation. One of the things I do, guys, in the Monster Market Movers when I teach, one of the patterns of the month that I teach is a wedge pattern. So that 100% breakout, meaning where the wedge started to where it finished, is a target, but it's not 100%. But how most of you have been traditionally trained, you're looking at that about 100-point move right down here from this 78 line, 1978, to about 2078, roughly. 2093, rather, roughly. All right, so about 100-point move to the upside, and then the breakout from 61, we're looking at a move to about 71, 78, whatever the number was, okay? All right, so there we are on the S&P 500. Now, what I wanted to do is just talk about one other stock today, and that's Caterpillar. Now, Caterpillar, now they've got earnings coming out, folks, so this is not something I'd be looking to jump in a trade right now. Okay, so if you see this red arrow in the Market Insights, that day we took a bearish trade on Caterpillar. Right, and we entered Caterpillar when the stock was at around $88.50 is where we took that trade. All right, and we took a bearish trade. Now the first exit we took came in on the exact same date. So we actually got out of that trade about 87.5 or so is the first place we exited on our position there. All right, so that's number one. Next trade we took, because we don't exit all at one time, guys. We go through up to 4 different exits at any given time on our positions. So the next trade was on the 13th. Right on this date, we took our next exit at this next support level. Our third exit came in on the 16th. Where's the 16th? Right here. Came in on the 16th on this day. And our fourth exit, we were stopped out. I don't even have to look at my notes. I know where it was. Right on this date, based on our exponential moving average. So we took 4 trades in this position. And basically what happened was this. I'll pull up a notepad and show it. So if we look, our entry into the position. Wrong tool. All right, so I cleared that off. Let me go ahead and use a text tool. And what we did was basically we bought to open the position at $88.50. We sold to close our first exit. Now this was an aggressive trade. That's exit number 1. Sell to close. Exit number 1. We sold at 87.5. Our second sell to close, we sold the position at 85.25. Our third sell to close, we sold the position out at 83.5. Our fourth sell to close, we're actually stopped out of the trade, and that's how it's supposed to work. Our fourth sell to close was 85.25. This is where we look for the home run trade. So basically what took place in this transaction, guys, is we were up. We had, and it's on a non-funded trade, of course, as everything we do here is. Our P&L in this position, our P&L was $1,250. Total in this trade. Now we did it as an aggressive trade because of how close we were to the support line, where we may have hit that bounce and taken off. Had we not done this as an aggressive trade, if this would have been a normal trade for us, that would have been a $2,700 profit, not a $1,250 profit. So guys, in Market Insights, and go to BetterTrades.com, and go, or if you're on the website here, RobertRoyTrader.com, go ahead and go down to the bottom, look at the tools, and it'll take you over to the section of my tools, and you'll be able to look up the Market Insights, and that'll give you an idea of exactly what we do there. All right, you'll see a couple of other videos up here as well of things that we do in that workshop. So by all means, come and check it out. Have a wonderful day. God bless, and I'll see all of you at the next update. Take care now, folks. Bye.